Welcome to Dave's Daily Crypto Take. Today is Friday, November 18th, 2022. Let's take a look at today's charts. At number one, BTC is at $16,841.97, up 0.98%. Ethereum at number two, $1,207.72, down 0.68%. Tether at number three, 99 cents. USD coin number four, $1. BNB at number five, $269.92, down 0.80%. Binance USD, $1. XRP at number seven, 38 cents, up 2.93%. At number eight, Dogecoin, 8 cents, down 0.26%. Cardano at number nine, 32 cents, down 1.44%. And last but not least, number 10, Polygon at 88 cents, down 2.05%. Let's take a look at the Crypto Fear and Greed Index. Extreme fear can be a sign that investors are too worried that could be a buying opportunity. And when investors are getting too greedy, that means the market is due for a correction. So what we got today is extreme fear at 23. Yesterday was extreme fear at 20. Last week was extreme fear at 25. And last month, extreme fear at 23. Let's look at our four articles today. Article number one, Bitcoin short traders ravage the market as whales intensify accumulation. Article two, the grownups are now taking charge of FTX. Article three, Dogecoin buyers can leverage this pattern's break to their benefit. And last but not least, the main topic today is Justin Bieber bought a Bored Ape NFT in January for $1.3 million. That's likely worth about $70,000 in the wake of the FTX collapse. Wow. So before we get into the articles, just want to say thank you so much to all my supporters. And if you're in the YouTube space, please like, share, and subscribe to Dave's Daily Crypto Take. And if you're in the podcast space and want to listen to the audio version, catch me on Apple, Spotify, or Google Podcasts. So let's get into it. Article number one, Bitcoin short traders ravage the market as whales intensify accumulation. In spite of persistent price decline, Bitcoin whales continue to accumulate. However, on-chain data suggested that most might be accumulating to short the king coin. Currently trading at a two-year low, Bitcoin whales have ramped up the accumulation on-chain data showed. According to CryptoQuant analyst Dan Lim, as BTC's price suffers under the impact of the general market downturn caused by the sudden collapse of cryptocurrency exchange FTX, whales are accumulating BTC for a long time. Dan Lim argued that the BTC market outlook did not look favorable in the short term and the midterm. Therefore, the only rational explanation for ongoing whale accumulation was to hodling in the long term, Lim said. Quote, although the crypto market and economic conditions are not good from the long-term perspective, accumulating from need to ultimate bottom through DCA or split purchase accumulation might be a sagacious way. Data from the on-chain analytics platform Sentiment further corroborated this position. According to Sentiment, since the FTX fiasco started, BTC has recorded a large increase in the number of addresses holding between 0.1 to 100 BTC. Since 7th November, the count of these addresses has grown by 9%, with over 125,000 addresses sized between 0.1 to 100 BTC created since then. At press time, this cohort of BTC addresses totaled 3.99 million. Further, on-chain data revealed that this category of holders had accumulated an additional 0.6% of BTC's total supply since 7th of November. There is a catch. While whales might have taken to coin accumulation in the last week, a closer look at BTC's performance on the chain showed that trader sentiment has fallen into a major negative bias. This attributable to the loss of trust in centralized exchanges following the collapse of FTX. It has led to a severe decline in fundraising rates on exchanges like Binance, BitMEX, and DYDX as investors bet on the continued decline in the price of the king coin. At press time, funding rates on these leading exchanges were at their lowest in the last 6 months. This might suggest that, contrary to Lim's position, the whales accumulating might be doing so in expectation of a further price decline. More so, on a daily chart, sellers were spotted in control of the BTC market as buying momentum began to fall. As of this writing, the leading coin's key indicators rested below their neutral points. For example, BTC's relative strength index was 37, while its money flow index, MFI, was 39. In addition, its Chaikin money flow posted a negative value of minus 0.12, following and showing further that buying pressure had waned despite an increment in whale accumulation in the last few days. So there you guys have it. What do you guys think about Bitcoin? Short traders ravage the market as whales intensify accumulation. Comment down below and let me know what you guys think. All right, article number 2. The grownups are now taking charge of FTX. FTX had no accounting department and reimbursements were processed with emoji. The job of new FTX CEO John Ray III, who was appointed in the wake of the cryptocurrency exchange bankruptcy filing, is ostensibly to guide FTX through a complicated restructuring and try to get the exchange's creditors and customers their money back. Ray isn't new to this game, having overseen that bankruptcy of another complex firm synonymous with financial scandal, Enron, so it should carry some weight that Ray, in a new court filing, wrote that never in my career have I seen such a complete failure of corporate controls and such a complete absence of trustworthy financial information as occurred here. He continued from compromised systems, integrity, and faulty regulatory oversight abroad to the concentration of control in the hands of a very small group of inexperienced, unsophisticated, and potentially compromised individuals. This situation is unprecedented. FTX's mismanagement, in other words, was a natural result of letting a bunch of kids, comparatively speaking, run a massive financial institution from a mansion in the Bahamas. Before FTX's collapse, co-founder Sam Bankman-Fried was estimated to be the world's richest person under 30, with a supposed net worth of $16 billion, but now Ray's court filing implies the grown-ups are moving in and taking charge. FTX's new directors have lengthy resumes with major restructuring experience. Ray's court filing emphasized the experience of the company's newly appointed independent directors, including Joseph Farnan, the former chief judge of the U.S. District Court in Delaware, and Matthew Doheny, who has worked on restructurings at companies including GMAC, Rescap, and Eastman Kodak. Under Bankman-Fried, FTX operated without financial audits, liquidity forecasts, or appropriate cash management, Ray wrote. The 5 appointed directors he pledged will provide FTX with appropriate corporate governance for the first time. And here, Ray took issue with FTX employees' spending. He said corporate funds were used to purchase homes and other personal items for employees, often without documentation. Missing audits, emoji, expense approvals, there might be delays in finding all of the relevant financial information necessary for the bankruptcy proceeding. Ray warned because FTX does not have an accounting department, and he noted many of the company's major business lines did not appear to have their financial results audited. Ray also pointed out the informality of FTX's reimbursement system, submitted payment requests through an online chat platform where a desperate group of supervisors approved disbursements by responding with personalized emojis. For perhaps one of the most pervasive failures at FTX, Ray suggested, is the absence of lasting records of decision-making. Mr. Bankman-Fried often communicated by using applications that were set to auto-delete after a short period of time and encouraged employees to do the same. The debtors, Ray added, are writing things down. So there you guys have it. Grown-ups are now taking charge of FTX. All right, next one is Dogecoin. Buyers can leverage this pattern break to their benefit. While defending the 0.07 baseline, Dogecoin formed a bearish pattern on its daily chart. Doge's social volumes declined, but its funding rate unveiled some hope. Dogecoin reversal from the $0.07 mark support finally broke the streak of red candles as the buyers attempted to change the narrative. Consequently, the meme coin grew but flattened near the 200 EMA. Meanwhile, the alt formed a bearish structure in the daily time frame. At press time, Doge was trading at 8 cents. Can the sellers induce another breakdown? Well, the previous buying resurgence aided the buyers in testing the 14-cent ceiling after witnessing triple-digit gains in just a week. With the market-wide uncertainties kicking in, the sellers quickly propelled a downturn over the last 2 weeks. The rebound from the 7-cent baseline induced a near-term consolidation on the charts. The resulting price movement chalked out at a bearish pennant structure in the daily time frame. A reversal below the 200 EMA near the 8-cent resistance can aid the sellers in provoking further losses. In this case, potential targets would lie in the 7-cent region. Any jump above the constraints of the 200 EMA followed by the 20 EMA can invalidate the bearish tendencies. The first major resistance barrier in these circumstances would be in the 10-cent mark. The relative strength index stood near the equilibrium while depicting a slight edge for the sellers. The buyers could wait for a convincing reversal for the 50 mark to gauge the chances of a pull down. According to data from Sentiment, Doge's social volume over the last few days has marked a steep decline. Given the price action's empirical correlation to this metric, the price could account for this decline in the coming sessions. Nonetheless, the coin's funding rate on Binance stood positive, and reversals on this front can resonate with the bearish narrative. Finally, Doge shared a 42% 30-day correlation with the King coin. Thus, keeping an eye on Bitcoin's movement would complement these technical factors. So there you guys have it. Dogecoin buyers can leverage this pattern break to their benefit. Comment down below and let me know what you guys think. All right, last but not least, the main topic today is Justin Bieber bought a Bored Ape NFT in January for $1.3 million. That's likely worth about $70,000 in the wake of FTX collapse. So 3 points in this article. Justin Bieber bought a Bored Ape NFT for a 0.3 billion January. It's now probably worth 70,000 according to the NFT price floor. The 95% drop in valuation comes after Sam Bankman-Fried's FTX collapsed and caused crypto prices to crash. And Bored Ape isn't the only Ethereum-fueled NFT collection impacted by the crypto crash. So, pop star Justin Bieber started off the year purchasing his first Bored Ape Yacht Club NFT for 500 Ethereum, a blockchain currency equivalent to 1.3. But the market value or price floor of individual NFTs from the Bored Ape collection has tanked to 58 Ethereum, or $70,000 as of Thursday morning, a 95% drop in value according to data from NFT price floor. Sinking NFT prices followed the collapse of crypto exchange at giant FTX earlier this month as the Sam Bankman-Fried scandal reportedly lowered overall crypto prices and hurt Bored Ape Yacht Club's NFT valuations. That's because NFT owners panic sold them to avoid prices from dropping even further. Bored Ape, which comprises more than 10,000 NFTs depicting cartoon monkeys wearing different outfits, is one of the most successful NFT art collections, valued at more than $1 billion. Before the crypto crash, Bored Ape NFTs prices peaked at $429,999 in late April in response to hype around the use of NFT land plots for its personal metaverse platform, Otherside. But since NFT sales have dipped, its prices have fallen by 82% as of this month. In addition to Bored Ape, some top Ethereum NFT collections are also facing lower values this month. DeGod's prices have fallen by 68%, CryptoPunks dropped by 37%, and DeGod's by 66%, according to Forbes. While Bieber never specified why he purchased an NFT, some critics speculate that celebrities buy NFTs as a status symbol, a way to flaunt their wealth and exclusive purchases. Talk show host Jimmy Fallon, model Paris Hilton, and rapper Snoop Dogg and Eminem also own Bored Ape NFTs. So there you guys have it. What do you guys think about this article? Justin Bieber bought a Bored NFT in January for $1.3 million. That's likely worth about $70,000 in the wake of FTX collapse. Comment down below and let me know what you guys think. All right, let's take a look at the prices one last time before we head out. At number one, BTC's at $16,841, Ethereum at $1,207, Tether 99 cents, USD coin $1, BNB $269, Binance USD $1, XRP at 38 cents, Dogecoin at 8 cents, Cardano at 32 cents, and last but not least, Polygon at 88 cents. So thank you so much for making this far into Dave's Daily Crypto Take. Again, catch me on YouTube. Like, share, and subscribe. And if you're in the podcast space, please catch me at Apple, Spotify, or Google Podcasts. Other than that, I hope everyone has a great crypto day, and I'll see you guys in the next one. Peace.